Good.
Hello, traders, and welcome to this week's live event. It is Wednesday, February 21st, and we are waiting for the FOMC minutes and NVIDIA earnings after the close. So we've got a little bit of a dead market right now. Let's start with my recent picks. And VKTX was a stock that I highlighted Monday when the market was closed. I like this D1 chart. I still like it. You can see how the stock has done pretty well considering that the market has been down the last 2 days. So we'll put the S&P 500 up. You can see we've been drifting lower Tuesday and today. So the stock has been holding up well. The underlying theme, though, has been really keep your trades short-term, stick with day trading. The market's going to take a pause in here. That's what Harry and I have both been advocating. CRWD was the stock that I highlighted last week. You can see how it's pulled back today. PAMW announced earnings overnight. They are down substantially, so CRWD is down with that stock. But there were some opportunities to trade it from the long side along the way. Harry's with us. He's going to have to bow out early, so I'm going to give him the mic, and he's going to kind of run with the ball for a bit. And Harry, how are you?
Hey, everyone. I'm good. How are you, Pete?
Things are good.
All right. Yeah, like you said, this is a fairly dead market, but this also is a good time to have patience. We have certain events coming up. FOMC moves the market simply because it's, not as much as it used to. It's pretty well known what was discussed. There's going to be, parsing through those minutes to see any evidence of how each one of the Fed presidents feel about the rate hike. So the first move you'll see will be an algorithm-driven move. And then after that, there'll be this sort of parsing through the language of who's going to be more or less likely to advocate for earlier rate hikes. So that's going to be what the FOMC is focused on. And then, of course, we have NVIDIA earnings, as you said, after hours. NVIDIA earnings is going to be a pretty dynamic event. A lot of, I would say, unfair weight is being placed on NVIDIA because it happens to be time. NVIDIA normally places itself a little bit later in the earnings season, but where the market's pretty much at an inflection point, right? You have SPY of 500, and I said the last 2 weeks, 500 is going to be sort of that line in the sand that the market may go over it, under it, but it's going to bounce around that number because in order to commit above 500, you're going to need some sort of catalyst, something that tells investors this market is safe, that it's going to continue to go up. And right now, since they haven't gotten that catalyst anywhere else, you've had some good earnings, some a little like Pando, Palo Alto, very bad guidance. But NVIDIA is really going to be bearing the brunt. If NVIDIA can manage to blow away their earnings, then you might have that impetus you need to go higher here. Also noteworthy, I've been looking through, and we don't get into fundamentals really here, but NVIDIA has a pretty fine needle to thread where I've even heard and read where if the earnings are too good, then they're going to be worried about supply problems in the second half of 2024 and whether or not NVIDIA can keep up. So there's a sort of this fine line on NVIDIA earnings that they're going to have to go through. Anyway, the challenge account, getting my ass kicked on IBM, that much is clear. I'm holding it right now. I mean, the daily chart's not terrible, but I'm holding it right now because the options lost so much value that there's a lot more upside than downside with NVIDIA earnings. If NVIDIA goes up, IBM's going to go up with it and restore the option value. If it doesn't, that option's going to lose the rest of its value, which is about 20% of what it originally started with. I did counter that by doing a put debit spread in Lulu and a put debit spread in Adobe. Both of those, if they reach their goal, will more than compensate for the issues on NVIDIA. And if you look at the daily charts, and we could start with, let's see, we could start with Adobe. You look at the daily chart on Adobe and Lulu, both of them are, when I took it, below their SMAs. Today, both Lulu and Adobe are sitting right above their moving averages. So Adobe sitting above the SMA 200. Lulu is sitting above its SMA 100. And it's literally sitting right on them. So I'm going to be watching those very closely to see if it manages to break through today. If it does, Adobe just breaking through now. If it does, then obviously we're going to keep those on. And if not, then we probably have to close those trades. So that is where we are right now. I do like Amazon, by the way. I like the fact that, being accepted into the Dow Jones 30 is no small feat. There's only 30 stocks in there. Obviously, it's not as widely used as an ETF as SPY, S&P is, but still, it's a pretty big statement. And what happens when these stocks get accepted into these ETFs, whether it's Tesla or Uber going into S&P, or right now Amazon going into the Dow, is that institutions buy these ETFs. They have their bucket and they buy a certain amount of Dow, they buy a certain amount of SPY, and that in itself buoys the stock, right? So Amazon next week will officially be part of that, and so every time those ETFs are bought, that goes into the stock. So that's going to, and you'll notice every time a stock like Uber or a stock like Tesla gets accepted into one of these ETFs, look at its upward trajectory over the next month. You get sort of almost a 10 to 15% bump by just acceptance into those. So Amazon, if to make a bullish pick, that would be Amazon right now for me.
Nice. Okay. You have a fairly balanced portfolio for your challenge account. You've got a couple of stocks that have had great relative weakness, and so you're short those, and you've offset that with IBM, which actually has shown a lot of relative strength. And that's pretty consistent with what the market's doing right now. This is a waiting period where it could go either way. So you've got it balanced off regardless of the outcome today from the NVIDIA earnings. So last week, your pick was also Netflix. We both like that one. And let me put that chart up. And that stock has actually held this breakout right here that we had, this downward sloping trend line here. We had a nice breakout to the upside. So this is the price action after the live event last week. So it's still holding up above AVWAP-E. I like it. I still think Netflix looks good to me. So it was a nice pick. Again, it's been able to tread water when the market has been pulling back.
Yes. I mean, if you took Netflix when we mentioned it last week, you'd actually still be in profit right now. Because I believe when we mentioned it, the stock was right around 570. It's 572. But hopefully what you did is if you did take that trade and did sort of a call debit spread or straight calls or whatever it is, you could have easily taken profit on Thursday or Friday and made a nice return on that. And you probably could have, you would have even been able to take profit on Monday. But you're right. Out of all the major, bigger stocks out there, Netflix certainly has shown itself to be buoyed up, and only institutional support can do that, by the way. I mean, that's the key. When that's what relative strength and relative weakness is all about, right? It's we're trying to get a window into what institutions are doing. It's why this whole mentality of damn the man that you get from the subreddits like Wall Street Bets and all that is so dangerous, because you're so conditioned to try to beat the institutions, beat damn the man. And what you really should be trying to do is jump on their tail. You should be trying to ride the institutions up and take the crumbs that they're dropping off the table, because institutions make money. That's why they are institutions. And you should be following them rather than trying to counter them. And what we do is try to get a window into what they're doing. And that's what technical analysis is all about. It's certainly not to try to figure out what retail traders are doing. Retail traders are very predictable. Shit is down, they're going to say, let's buy it. Shit is up, they're going to say, let's sell it. It's the opposite of what they should be doing. But institutions, that's what you're trying to figure out, where they're directing their capital.
Thanks for that lead in, because last week, and I haven't had any bearish picks for a very long time. But I was watching price action and I highlighted Apple with the caveat that we need to have the market moving lower. And I showed you the price action that told me that Apple was going to be weak. So we had relative weakness. The stock was breaking below the major moving averages. Lo and behold, Warren Buffett has been selling his shares. Well, if that's not smart money, I don't know what is. And oftentimes, all the time, almost on a daily basis, we're going to be taking positions. The news isn't out, nothing's happened. All we know is that we can see from the price action that there is institutional selling. We take a position, then the headline comes out a day or two later, and the stock really drops. And this is a classic example of how this all plays out.
SPY, by the way, just decided to say screw it and dropped here in the last three, and so did NVIDIA. So there's been a little bit of a shift in the market, which went from sort of this low probability trading environment, chopping back and forth, towards this, if we get a continuation off this drop, perhaps the beginning of a bearish trend for the day, all of which could be mitigated by the FOMC. Keep in mind, those events tend to override the trends and technicals you're seeing. But looking at the last 3 5-minute bars on SPY here, I'd say in an increase in volume, I'd say that there is some serious selling going on. We'll see if it continues, though.
Well, and this is a sign of selling pressure as well. Yesterday, these are 5-minute bars. So yesterday we had the gap down on the open, and then we had some pretty decent selling in the first hour of trading. And then the market just kind of sat there. But the clue yesterday was the fact that the market really couldn't bounce at all. So typically in the last 3 months, we've seen these little pullbacks. And then as soon as the market finds support, long green candle, long green candle, long green candle, test the high of the day, try and fill the gap. Yesterday, we barely got above VWAP. And then we rolled right over. And then we spent the majority of the day below VWAP. Well, that is a sign that there is selling pressure. Every time the market tries to poke its head up, whap, 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 there are sellers. And today we've seen similar price action. We're down near the low from yesterday, and these long green candles that we've seen, whap, whap, whap. So they keep getting driven down. Sellers are seeing those little bounces as an opportunity to reduce risk. Harry had mentioned earlier that we need a catalyst. And right now, there aren't many catalysts. So typically the FOMC minutes, they're not a big deal. Okay. On a lackluster, dull trading day, traders are going to wait around for anything that they can latch onto. So today we're kind of waiting for the FOMC minutes. Personally, I believe that the comments that were made during the last FOMC meeting are going to be more dovish than where the FOMC, where the Fed officials are right now. And the reason that I feel that way is because we've had a hot CPI, we've had a hot PPI, and we've had a very hot wage component in the last jobs report. All of that information has come out after the FOMC meeting. So I think they're going to be even more hawkish than what might bear out in those comments today.
I agree. I'm just watching this right here, trying to see if there's anything pushing this here at the moment. But I do agree that, this market has very much tried to price in the beginning 4 rate cuts. Then it moved to 3 rate cuts, and then the rate cuts were supposed to happen in May or March, and then they kept moving it up. And the market itself really hasn't compensated for that. So that's also part of what you're seeing, which is a lot of this market was boosted on the back of that optimism behind aggressive rate cutting in 2024. And then what we had was some numbers that came out. The economy remained extremely strong. It's difficult to cut rates when the economy is strong because you're always afraid that if you do that, inflation will start to go back up. And the worst thing in their minds that could happen would be sort of a return to an increasing trend in inflation. So, and clearly, there's no reason to cut rates as long while the economy is strong. And until we start seeing some serious signs of weakening in the economy or a huge drop in inflation, we're going to have, this sort of continued issue on when we should cut rates.
Yes, and in terms of global economic growth, the US is the best game in town right now. China's growth has been slipping steadily. They've got all sorts of problems right now with deflation. They have problems with the property development companies, potential bankruptcies looming right there. The PBOC recognizes this. They just cut interest rates, which is kind of a classic example of the market's addicted to easy money. We want rate cuts, rate cuts, rate cuts, rate cuts. But if you start getting rate cuts, it means that the Federal Reserve is seeing economic weakness. And if we start hearing about rate cuts, I personally feel that the market's going to worry that, oh, what do they see that we don't see? What do they know that we don't know? Did they wait too long? How bad is this going to get? And a lot of the best market rallies have come in a rising interest rate environment. That's because there's strong economic growth. I feel that we need to keep seeing those strong economic numbers. Any dip that you might see because of a strong economic report, good news is bad news, that's a buying opportunity. Conversely, if we start getting some weak economic reports out and you see a market rally off of that because bad news is good news and the Fed's going to start easing, I see that as a potential canary in the coal mine that the market could start to really flatten out, perhaps even pull back. So to give some perspective on economic growth, Japan, the third largest economy in the world, actually just eclipsed by Germany, Japan, they are in a recession. The EU, flat growth in Q4. They had negative growth in Q3, so they narrowly escaped a recession. So you've got China retracting, Japan's in a recession, Europe is almost in a recession. Where's the growth coming from? Well, the US, like I said, has been the best game in town. So does that mean that we all of a sudden get bearish? No, look at this chart. This chart is telling us that we need to remain bullish. Yeah, but Pete, there's a double top lower high here, and maybe we're just going to roll right over. A bull market rally like this is going to die hard. And until we see some long red candles off of this high, then we're going to get a little bit of a bounce, and we're going to try and get back to the high. When that gets rejected, okay, now I have technical confirmation of resistance. That's when I would start taking a more bearish tone. But right now, any of these dips could just be a compression, just like what we had back in here. All the negative rhetoric that we were hearing back in here. Oh my God, double top at the previous all-time high. Oh, the market's going to retract 10%. That's happened historically. You start getting all these negative headlines in here, and what does the market do? See you later. So if you got short in here, you get your head handed to you.
Got an interesting question here. A good one that I think a lot of people have had from time to time, because we've all seen this. Sometimes a stock has strong signs of relative strength during a market pullback, but it does not move up when the market inevitably finds support, moves back up, and then later begins to lose its relative strength. What are some ways to avoid relative strength false signals? Well, it's not a false signal. There's no such thing. It's not you were seeing relative strength. If stock was moving up when the market was dropping, that isn't false. There is some buying going there, but the type of stock and the volume aside. However, yes, there are times that once the market then regains its footing, what happens is that the capital that's been going into that particular stock as the market is dropping, because it's not going into other areas of the market. It's not going into, let's say, tech or the ETFs or whatever. Institutions are pulling some capital away and redistributing and causing that drop, but it is directed into a certain stock. So when the market finds some balance, sometimes when it starts going back up, they pause their buying in the stock that you were looking at that had relative strength and begin to distribute it back into the general market. But it still gives you indication there was a reason they were buying that stock while the market was going down. In fact, there was a reason that they did not feel they could get a better price on that stock and wait for it to drop with everything else. So, you know, it depends on the time frame you're looking at, but generally when you see that happen, the key is to just be patient and you'll see that relative strength tend to return. Again, volume and the stock itself aside, you know, but yes. What do you think, Pete?
Yeah, I agree. And sometimes stocks are just in equilibrium. So regardless of what the market's doing, there's a balance of buyers and sellers. Sometimes the company doesn't have a lot of material news coming out, so it's relatively stagnant. It's trapped within a trading range. When the question's posed to me, well, what happens and how do you avoid these traps? It's not a trap. What happens when the market goes down and you buy a stock with relative strength when the market has found support is, okay, you're in the position, you're not losing any money. The market starts to go higher. You have entered that trade because you believe that the market's found support and the market is going higher. You are long that stock because you believe that when the market starts to move higher, the stock will move higher. When the stock doesn't move higher, your thesis is flawed. Exit the trade, give it as much time as you can, look for the fastest horse. So you're not committed to it. You don't have to be in the stock. Plenty of other stocks are going to show you that upward movement. So you should not be trapped at all.
Loving the relative weakness I'm seeing right now in Adobe, which is certainly helping that debit spread I have on the position. That position's up in that challenge account over $500 right now, and it has a $4,500 potential to if Adobe gets below 520 come Friday. So at the moment, I'm just letting that run. I'll have a decision to make at the end of the day because of NVIDIA. And, you know, swinging into an earnings like NVIDIA, particularly if you have stocks that are in the industry or sector of NVIDIA, is almost like playing the earnings itself a little bit, because you are taking a coin flip chance. If NVIDIA, for example, blows away earnings, goes up to 800 tomorrow, it's not like Adobe's going to still be down, right? So that is a position I might take profit in, whereas Lulu is something I may hold, especially if it's under its SMA, because that'll be less impacted by NVIDIA earnings. If Lulu's going down, even if the market's up, Lulu will still go down. So, but Adobe is one that I'll be watching closely to take some maybe early profit in, thanks to the NVIDIA earnings.
And you can see the relative weakness here. Orange line below zero, relatively weak. You look at the S&P 500 or the SPY, it's on the low of the day, above the low from yesterday. What has Adobe done? It just took out the low from yesterday. And that's bearing out in the 1OSI indicator also.
Question, looking at Lulu, how would you find the downward target on D1 basis? That's simple. If it is and closes below its SMA 100, which is 445.25, there's nothing but an air pocket there till 410, right? I just need Lulu to be below 430 on Friday for the put debit spread to completely realize its profit. So it's as simple as a 1-0 here. If we are below that SMA, then I'm going to let it run, and it should have all the space it needs to go way below the target point that I need, which is 430. So that, you know, when you look at something like that, you go, where's the next level of support? There are no trend lines here that can offer its support that I can see. There's nothing, I mean, there is a slight downward sloping trend line that comes off of December 15th, but it only has really 1 to 2 points of contact. It's not very strong. That comes in right around 434. So there is some support around 434, but it's minor. But really, you look to see where's the next level of significant support for the stock, and is that level below where I need it to go for my position? And in this case, it is.
There's a question that just came up. Would you do a straddle on NVIDIA? No, I would not, because it's a neutral trade. I am a directional trader. I must have a firm opinion on direction. I do not trade earnings. Are you selling the straddle or are you buying the straddle? Most traders don't have the margin requirement to sell a naked straddle. They also don't have the wherewithal to stick with a position like that. So I'm assuming that you would be buying the straddle. Well, those option implied volatilities are sky high. You could get a big move in NVIDIA and still lose money on that straddle. And the reason the option implied volatilities are high is because market makers do not want to sell options ahead of a major news event like this, because the stock could move huge in either direction. In Option Stalker Pro, we do have the ability for you to look at the earnings that are coming up. This is our pre-earnings option window. And if you scroll down the list, you'll see NVIDIA, and you can see that the expected move is approximately 14%. That's what's priced into the options. The average move is about 5.5%. The percentage of times that this expected move has been exceeded in the last 3 years is 13%. So your odds of making money on this trade are pretty negligible. There is a strategy that we use. We sell calendar spreads earning into the earnings announcement. But you can see that the differential is not that great between this week's options and next week's options. So there's about a 23.23 difference. So I don't think that sets up particularly well, but Harry, you might have a different opinion on this.
Well, I want to tell a little story. So you remember when you were in high school, college, whatever it was, and you're studying for math is probably the best example. You're studying for a math exam, whether you're proficient in math or not, let's say. It doesn't matter. And you have really two choices here, right? If you're studying it. You can memorize the equations, right? You can memorize it, and when you see it on the test, you can do your best to apply what you memorized. Or you can try to really understand theoretically what it's doing, right? Why is it the way it is? Obviously, if you understand it, not only will you most likely do better on the test, because chances are a question will come, and even if you memorize the equations, you won't know when to apply or what to apply if you don't understand what it's doing. But it'll probably stick with you longer, right? You can forget something you memorized, but if you truly understand something, you won't forget it. So when you're talking about a straddle, I'm going to bring this now full circle. What are you really talking about? What you're saying is, I think the market makers are wrong. The market makers have priced NVIDIA, and this is what you're doing a straddle on NVIDIA, or you're doing a straddle on SPY for anything, or any straddle. The market makers here have clearly pointed out, we think there will be a plus or minus move in NVIDIA of $69, $70 off earnings, somewhere in there. So if you take this straddle, you need NVIDIA to move more than $70 up or down, right? As Pete said, it's not directional, right? To make money. Let's say you take the straddle and you spend $35 for the call and $34 for the put, and let's say NVIDIA goes up. Well, you now spend $69 on the straddle, so you need your put's going to be worthless. So you need, if it goes up, you need your call to be worth at least $69. In order for that to happen, NVIDIA has to get to 739. Now, by doing the straddle, you're not doing it to break even. You're doing any trade, obviously, always to make money. You're saying that you believe NVIDIA is going to move more than $69 either way. So one that says the market makers are wrong, right? And the market makers, let's just make it clear. they're wrong sometimes. Clearly, they were wrong. Pan W, right? Now, they didn't price in $100 move on Pan W, but clearly that's what happened. But they have a hell of a lot more information than you do in terms of trying to figure out what the projected move is. They take the historical averages, the price points, all of that into effect. So you have to have a reason for believing that this stock, when you're doing a straddle, is going to move more than the projection by the expiration date of those options. In this case, if you did straddle, it would be this Friday. So you have to ask yourself, why do I think NVIDIA is going to have a big move? And you're going to say, well, it's NVIDIA. And, you know, I remember seeing it move $120 on that one earnings. Well, I also remember seeing NVIDIA move $40. I remember seeing NVIDIA move very little at all just a year ago. So, you know, there are a lot of outcomes here. There could be both a mix of good news and bad news, and investors could feel, hey, it's valued perfectly here. It should stay right around where it is. And it only lose $10 or $15, in which case you lose almost all of your straddle. So again, understanding what the trade means. By doing a straddle, you are saying, I believe the market rate makers are getting it wrong here. The move is going to be bigger than what they're saying it's going to be. And you need to have a good reason to believe that. Otherwise, you're betting against the institutions, you're betting against their collective wisdom and feeling that you know something they don't. You might be right, it might pay off, but how often is that going to be the case?
Barry, I've got, didn't realize mRNA is tonight. You are our resident expert, and I'm looking at that. The expected move is 14%, average move 6%, times exceeded 21%. And there's, it seems like there's an okay differential. I don't know if you're considering that at all for earnings calendar.
I mean, look, I made money on Moderna, but I'm not as confident in the stock as I used to be. It was for fundamental reasons. They're going to need to start relying on more than their vaccines to show to get back to profitability. So right now, you know, it's projecting that $9 move in it. You know, you could sell puts if you think, all right, no matter what, Moderna is probably not going to go below 80. You get $1.40 for those. It might be like picking up nickels in front of a steamroller, though. So for me, I'm probably going to leave that one alone. But I still think, you know, if you're looking to be an investor and you're probably more patient and you're going to wait a couple of years, then yeah, Moderna, based on what they're doing in AI and their research and medical research, I certainly believe that fundamentally Moderna is probably going to be worth over $200 a share in more than a few years. But that's going to require a lot of patience, including the possibility that the stock dips down to 60 or 70 before it recovers. But in terms of a trading scenario, right now, I wouldn't touch it.
For those of you looking for an earnings calendar play, yeah, Run has a good profile, but it's not an expensive stock. It's about $15 or so. Since we're on mRNA, I do have a question. How much do you guys usually like to allocate per trade as a percentage of your account?
That gets asked a lot, doesn't
it? That's why I just wrote that article.
I've allocated 100% of my account to a trade at times. I've allocated 50%. I've allocated 5%. It just, you know, it's just a matter of how confident you are in the trade to me. And people think you're risking. Like if you have $5,000, let's say, you make a trade and you buy $5,000 of options. People, you know, say it's a $10 option, you buy 5 of them, right? Oh, now you're risking. You're risking only as much as you're willing to take a loss at a certain level, right? If I bought 5,000 shares of 500 shares of a $10 stock, I'm not risking $5,000. I'm risking whatever price point I'm willing to hold it to. So if I say after $8 I'm closing it, well, I've risked $2,000. People seem to equate, if you're putting all of your account into a position, you're risking the entire account. You're not. You're risking whatever point that you're willing to have your mental or actual stop at. So there's a little bit of a difference there. But I tend to go balls to the wall on some trades. I tend to, hold back on others. But, some people go by a very strict rule. I don't believe that, but that's me.
Yeah, the whole nature of the question speaks of mechanical entry, exit, stop loss, number of positions, very rigid type of thinking. And for me personally, it has to do with check boxes. What kind of market environment am I in right now? And I think if you look at Harry, Dave, a lot of the other seasoned traders in the chat room, they're not trading a lot right now. I certainly wouldn't be trading a lot right now either, because the market is in this transitionary phase where we're kind of waiting to see what plays out over the course of the next week or two. But certainly 2 months ago, hell yes, that is the time to be balls to the wall, because you have got the right market setup. So you're leveraging your capital, and as a percentage of the account, well, I can allocate a hefty percentage of my account to selling an out of the money bullish put spread that's actually fairly conservative, maybe 2 standard deviations out of the money, or I could be buying weekly out of the money call options with the same percentage of my account allocated. Those are 2 vastly different risk profiles, reward profiles. So if we're strictly talking stock percentages, okay, but as soon as you start adding options to the mix, the whole character, the strategy becomes very, very important. But I think of it more like a professional, not your casual weekend blackjack player, but your professional who's playing a single deck, and he is card counting. He's going to keep his bet very, very small until the odds favor him. Then he is going to step up and he is going to take a very big bet because the odds favor him. That's what you have to do when you're trading. So it's not always this mechanical process that I've read a lot of books where it's like, if you buy at this price, you have to have a 5% stop loss and a 10% target. That is just hogwash. So it has to be dynamic.
Couple individual stock questions here. What do I think about NU? I don't think about NU. To me, trading a stock like NU is like if you're starving and yet you eat 1 grain of rice at a time. I mean, the thing has an ATR of 35 fucking cents. Who cares? The stock is going to move up. It's going to move down. I mean, if you're, I don't even know what you would be right now. If you're long NU, I mean, the stock's a little weak today. I'm almost falling into a coma looking at the chart. I'm looking at the stock. I'm so disgusted by a stock like NU. I wouldn't even go near it.
I would be more bearish than bullish on that chart, but yeah, it doesn't offer me anything. When I see this kind of chop, we are paid to predict price movement. When I look at a chart and it's choppy all over the place, I can't predict that price movement. And I've discussed this previously, and I've discussed it in my articles. That is a move I can get behind. I'm in here. Where do I think this stock is going after a move like that? Looks like it's going to continue to head higher.
Yeah. If NU was a
Stock
person going to
selection
a
is very
party,
important.
would be the one talking about the new tax code. You'd avoid them at all costs. What do I think of AMD? Would it be adversely affected by NVIDIA's ER? Obviously, and AMD is going to be impacted by NVIDIA. I mean, if you're playing AMD right now, you're playing it as a surrogate to NVIDIA. That's all you're doing. Then just have the balls and play NVIDIA. I mean, honestly, because AMD right now, there's no point in even looking at the technicals. It's going to do what NVIDIA does. If NVIDIA has great earnings, it goes up. AMD is going to be impacted by that. Unless NVIDIA has some sort of thing in their earnings that talks about something that they're doing that's going to directly compete with AMD, which case it'll have an inverse effect. But either way, AMD tomorrow is going to be reliant on what happens to NVIDIA tonight. So there's really no reason to think about playing NVIDIA if you are trying to do something technically. That's just a gamble. TRV from yesterday had some great volume selling, but you went long TRV from yesterday. Let's take a look at TRV. That's not a bad long. The stock's at an all-time high. I see it's down a little bit today, but considering where the market is, it's actually not relatively weak. It's just kind of moving down a bit with the market. It doesn't have it's not a great volume stock. Averages 1.5 million a day. So, you know, the ATR also isn't great. It's 2.96, but compared to the stock price, it's not fantastic. Still, it's not a bad long. If you're in it, I wouldn't get out of it just because of today. But it's also, you know, it's at an all-time high. So you might expect a little bit of pullback here, but I think it's well set up on a daily chart to keep going. So if you're long on it, there's nothing in the daily chart on TRV that tells me you should get out of that position.
Yeah, I like it. I think this is nice. You can see how the stock's been able to inch higher. You have this compression breakout. This is all post earnings. It's above AVWAP-E. Yesterday on a down market day, you actually had a nice long green key bar. So yes, looks good to me. You can see mixed overlapping candles. It tells you that the stock doesn't go anywhere fast. And if you were day trading it yesterday, you look at the 5-minute chart, you can see that it moves. I mean, it's got some choppiness to it. And so, you know, today you wouldn't be rushing in to buy this stock. Why would you do that when the market's down? You know, the market was down yesterday. It's down today. You've got pending news, FOMC minutes, and you got NVIDIA after the close, which NVIDIA is now market cap wise as big as Amazon and as big as Google. So it's going to have an impact on the overall market. But with news coming out like that for a day trade, you know that this is going to be a fairly low probability trading environment. You're just going to have to wait this out. Swing trading wise, yeah, I think the stock looks good. It's not a tech stock. It's a financial. Financial stocks have done well. Put up the XLF. You can see how the XLF is held up very nicely. Hasn't rolled over like the tech sector has. So yeah, you're in the right sector. I think you're in a good stock with that on a swing basis.
There we go. See here. What do I think of Abbott long? Should I wait for a SPY to find its footing or go long now? Let's take a look at Abbott. I've seen a couple of people in the chat room go long Abbott. And I'm looking at it now. I like Abbott. Earnings are not until April, which is good. Nice long bar yesterday, and it is supported today. It doesn't have every reason to retrace, and it did not. I like Abbott long. You're not going to get too beaten up on the option prices here. You got a little bit of resistance here at the high of yesterday, 117.19, which is hovering right around. But look, if you wanted to be really conservative about it, you put an alert, you wait till it breaks the high of the day of yesterday, and then you go long. But Abbott is a pretty good long. So Umesh Padar, thank you for that call out. I think it's a pretty good long there.
Yep, I like it too. And if you're day trading it, you see this type of volatility. It is choppy all over the place with an upward sloping trend. Cool. What does that mean? That means I buy dips. I do not chase breakouts. The stock will give you plenty of second chances to enter. So for a swing trade, personally, I'd wait to see what the news does today. If NVIDIA blows the doors off of estimates and the stock rallies after the close, it might be up a little bit tomorrow, but you're going to have time to get in on a stock like that.
Why did I take Melly short? Someone asked. That's going to be more in the Wiki 2.0, but it has to do with a failure to break horizontal resistance and its ATR than anything else. And just like bounces off of support will be in the new Wiki as well. but you'll see Melly failed to get through resistance. It tried several times. It has a large enough ATR. So, and I also felt that the market was soft. Melly tends to move with the market. There's very rarely a news event that interrupts that stock. I know it has earnings on Thursday. I'll probably be out by then. I'm already up $30 on the trade. I shorted it at 17.58. So, you know, the trade's fine right now. I can close it and take my $30 a share profit, but I'm leaving it open for the moment. We'll probably close it before close today, actually. But again, that has to do with a resistance rejection more than anything else.
I have a question. Pete watched a video of yours on YouTube from 2017. Is that method of trading still something you would do in 2024 with OneOP Progress and Market First? I'm not sure what the video might have been. I can say that my trading has been very standardized in the last 15 years. If you watch videos from 2008, you would see me still doing a lot of the same things. It's just refined a bit more. If it was related to trading S&P 500, I can and do trade S&P 500, but I'm very selective on the days that I will trade it. And so today I would not be trading it because there's no movement. But if I'm in a trend day, I would trade futures because it's an easy way for me to leverage my position, take some size. It's not something I advocate because it's like crack cocaine. Once traders get on the S&P 500, that's all they want to trade. And there's no edge to it. So you're almost always going to be better off trading the underlying stock. So I have to know that I've got that strong tailwind. So I'm not really sure which video that might have been or exactly the nature of the question, but the way that I have been trading in 2017 hasn't changed much from the way I trade now.
Pete is very consistent. I will give him that. You can go back to 2010 and he will be telling you very similar, same method. There might be some new updates, certainly a lot of updates to the platform. But, you know, one thing you can know is if a trader is giving you a method and over a decade, that method is the same method and they're still successful in it, well, that shows the consistency that you want. That's what you're looking for. You want the person that you're following who's teaching you how to trade to be consistent in what they're teaching you because it means it works. Let's see here.
And you could see Harry posts all of his trades. He posts the performance of it. So there's never any question of is this legitimate or not. Those are his actual trades. I do videos, and every video I highlight trades. And the first thing I do is to review the trades. So if you want to get a sense for the system and my track record, all you have to do is watch the first 5 minutes of every video. You'll see the pick and how it's been doing, which incidentally, I haven't given you one today, but I like this stock. It's Garmin. And I like this breakout here through horizontal resistance. You can see we've got a high minus trend line that it's also broken out through. So we'll zoom in on that. Earnings were before the open today. And you can see the stock has moved nicely. Now, I like to give these stocks a little bit of time to show their true colors. 5 to 10 trading days, and I tend to favor like 7, 8, 9 trading days even more than I do what happens the first week. Once I start seeing that these gains are going to hold, then I will start taking a position in the stock. So Garmin's going to be your pick of the live event today, but I would be waiting on it to see how much of this candle we retrace. I'd be a very willing seller of the 130, 125 bullish put spread once I have that confirmation that the breakout is going to hold and that the majority of this long green candle is going to hold. Abbott, okay, I preached above the trend line that I just set a few minutes ago. So it's obviously at a new high of the day. And yes, it just took that price level out.
Well, question and references Garmin here, actually. After an earn gap up, a stock often retraces, compresses above VWAP, such as Garmin now, would you consider going long the sideways such as today? Well, he obviously said yes, he would. But careful about generalizing that, you know, after earn gap up. I mean, just like an earn gap down. Look at PanW. It broke through VWAP, but it just kept going down, right? So, if you did the reverse of what you're thinking, PanW should have gone up to VWAP and then dropped again. Some stocks, well, actually, it does do that, but that's not a constant. But it's always best if what you're basically saying. There's generally no reason to chase something. You can wait for that drop to VWAP. It doesn't just happen after earnings gap up. It happens on gaps up, period. There are times where gap up will continue to run, and you might miss those. But better not to be caught than to wait till you see VWAP tested. So it's very contextual. There might be a reason something's running, and you can't assume that it's going to come back and test VWAP. But if you're it also matters if you're day trading it or thinking of swinging it. PanW worth picking up now after the huge drop due to ER. That is a fundamental question, not a technical question, not a trading question. So that's not something that, I have my opinion on that, but it's not something that I would say I have enough expertise to guide you. So I'm not going to answer. And I'm just running through because I do have to head out in a couple of minutes. And thoughts about MA above SMAs, filling the gap, no resistance, all-time high. Okay, MasterCard here. MA, no, it's filling the gap. It's heading back up to its all-time high. It's strong today. If you're looking for a long, you can do worse than MA here. It's pretty nice, and you could probably get a good bullish put spread in this. So you have support here at 436. So if I look at MA right here, and I look at the options and go out to, let's say, March 8th, and I try to do, probably have to go to March 15th, and I try to do the 435, 430s. No, I'm not going to get enough credit on those. So you're going to have to go way too far out to get a good enough credit on MA to do a bullish put spread. So in something like that, I would probably do straight calls. You don't have a huge IV. You can go out to March 1st. You can get the 450 calls for $9.60. That might not be a bad play. You can go even deeper in the money on that. Expensive options, but not because of IV, but because of the price of the stock. MasterCard, it is in the gap. I think it's a pretty good play.
Yes, and they had there was news yesterday with Capital One buying Discover Financial Services, and gee, is that merger going to be bad for MasterCard? I don't think so. I don't think it impacts MasterCard at all. They've got so much market share. So yes, I think the safest way to play it right now would be to sell that out of the money bullish put spread if you could get premium for it. So if I'm going long, I'm going to wait for it to get above this AVWAP. But it closes above that, I would feel better about it. And that also is in the area of this last compression in here. So I'd still give it a little more time. But yeah, I think this is probably going to be a good trade. Plus, it's in the financial sector, which has shown recent strength.
I just exited Adobe, by the way, for the challenge. It took 70 cents profit on that trade. And again, I did it because it's going to be very dependent on some NVIDIA earnings tonight. I don't want to hang around for it. I have some profit. I am keeping Lulu on, but I did take the profit in Adobe for today.
And there's a question on Roku. Yes, it looks like a good short. Got this big drop after earnings. But Matt has said, I like Roku. Well, I don't know what I like Roku means. I like Roku short. You might be looking to buy this big drop, which I do not advocate. Big drops like this happen for a reason. Institutional money is flowing out. It needs a long time, months perhaps, to form a base and to show me that buyers are once again interested in Roku. And you might feel that, well, gee, it was at $108 and now it's at $65 and it'll go back to 108. I've seen so many stocks go from 108 to 8. So just because it's been up here don't assume that it's going to go back there anytime soon. It may never go back there. Right now, institutions are selling it. You can see that in the price action. Get the hell out of the way.
I have to head out, but I'll leave you all in Pete's good hands, obviously. And I will see you next week, Pete. Have fun without me.
All right, Harry, thanks so much. We'll see you soon.
Thanks.
All right, so I'm going to continue to answer a few questions. I do a little bit of market analysis, talk a little bit about low probability trading environments, when we can see them. So when you don't have a lot of news coming out for the market, when the market is trapped in a trading range, I'm going to put the D1 chart up of the S&P 500. Right now we are trapped in a trading range. We had all this news. And I've been very vocal about this in my live events. We had the FOMC meeting right here. We had Apple earnings. We had Google earnings, all the mega cap tech companies. This is where we stepped aside from our bullish longer term swing trades. Let's take a break. All the air is getting let out of the balloon. All the big news, the jobs report, major news right here. We get this pullback. And now we go into kind of hand-to-hand combat because the market should start to find some resistance in here because we've moved very far, very fast. So now we can still take advantage of these moves intraday with very short-term trading, and we're limiting our overnight risk exposure. So that's been where we're at right now. There are a couple scenarios actually 3 scenarios that I'll be watching for. One is that we just continue to move sideways here for the next 2 weeks or so. If that happens and we're able to preserve all of these gains from back in here and compress, that's a sign that buyers are still engaged. They're interested. Now, this is a little bit more wobbly than this price compression right in here, which is much stronger. So wham, 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 wham. Every time they hit the bid, it doesn't budge. Here, it does. So buyers are not quite as aggressive at this level. We're also seeing a spattering of red candles in here. Didn't see hardly any of them in this move right here. That's another sign of resistance. So scenario 1 would be very bullish, and it would be a compression right up here. We don't move any lower. And then we start seeing some stacked green candles and a new all-time high in the next 1 to 2 weeks. That'd be very bullish. That would tell us that buyers are still very interested. A second scenario would be a little bit deeper and a little bit longer dip that could take us down to this 490 level. And it might last 2 weeks or so. We form support and then we start grinding higher. And we get that nice breakout with a long green candle to a new all-time high. That would be bullish, not as bullish as a compression near the high. And the third scenario that we could see is a longer-term pullback and this horizontal resistance, now support, right in this 480 level. We also have a VWAP Q coming into play around that same level. We also have the 50-day moving average coming into play around 480. A pullback of that magnitude tells us that there is some pretty decent selling pressure and that we are not going to be back off to the races, that it's going to take a while to digest these gains, and perhaps the backdrop is changing a little bit. Maybe we're starting to see some economic softness. The magnitude of this drop and the duration of this drop tells us what we should do next. And if this scenario plays out, we would be inclined to sell out of the money bullish put spreads on strong stocks. A pullback of that magnitude is going to start getting option implied volatilities to be higher. So we're going to be rewarded for taking a more for favoring selling strategies. And we're going to have more distance, more cushion, because the market will be able to move around more and will stay out of harm's way. Right here, this is a good time to just sit back, wait, and see what happens. When you get into this type of 5-minute chart, mixed overlapping candles no real movement at all, light volume inside day today. This is a low probability trading environment. Not much is going to happen. This is a great environment for you to piss your capital away. So best thing you can do is turn your screen off. If you're tempted to trade, don't do anything. Maybe on occasion, you're going to find some sector rotation. Maybe it's the energy sector. Maybe it's financials. Maybe it's technology. If there's a really strong sector and a really strong stock that you can get behind, well, the market's not going to help or hinder. So you don't have to worry about the market rug getting pulled up, but you're also not going to have that market tailwind. And so you can take those positions as long as the stock has nice, consistent, orderly price action to the upside. So make sure that when you're heading into a holiday, I mentioned this last Friday, got a holiday coming up next week. Holidays tend to suck the life out of the market. So usually you lose the day before the holiday. Usually you lose the day after the holiday. Major pending news, the jobs report, the FOMC statement. Those are times when you can also expect that there's going to be low probability trading environment. Everybody's squaring up. They're not placing big bets ahead of that major news. They're already in position. They're waiting for that news, and then they'll trade the reaction. If you get a big market move, let's say 50, 60 S&P points in a given day, very good chance the next day the market is going to pause. It's not going to move much. It's kind of digesting what's happened the previous day. So being able to anticipate those low probability trading sessions is going to help you with your game plan early in the day. You're already going to be in defensive mode. You're already going to be in the mindset to where you're going to err on the side of caution. And so don't take my word for anything that I've said, by the way. You shouldn't do that with any YouTuber that you follow or any quote unquote guru that's out there. Go back and verify that what they are currently telling you is actually true. And so if you watch my live events and all my videos, you know, I've been telling everyone since back in here, go to the sidelines, day trade in here, we'll catch the rest of this move, and then let's see what happens. So we're in a bit of a holding pattern right now. Okay, I'm continuing to take a look at a few other questions. Most of these tend to be stock related as opposed to trading related. So I'm going to take a look at a couple of these and then we will call it a day. What do I think of Disney here? Well, Disney had earnings. As I mentioned, I like about 10 days to let that earnings reaction really settle out, because oftentimes what looks great initially doesn't look quite so good after 7, 8, 9 trading days. So you can see that I have an alert line set here in the event that Disney happens to poke below it. If it does, it's more than likely going to be filling in some of this gap right here. So Disney, I would still be in wait and see mode, especially ahead of major news today. If the market sells off on NVIDIA's news, this horizontal support is going to be broken, and then the stock will have plenty of gap to fill in here. GILD. So if you ask me a question, and this is a pet peeve of mine, what do you think of GILD? What do you think of PANW? Tell me what you think and why. And then I'll tell you what I think. But otherwise, I don't know if you're positioning long or short, if you like it, if, you know, give me an idea of where you're at on the stock. And, you know, like PAW, as I mentioned, that's going to take a long time to work off that news and for it to find support. Institutions are selling it. And there are bottom pickers out there. And that is a very, very bad strategy, also known as trying to catch a falling knife. You'd lose some fingers that way. So GILD is so dang choppy, you know. It's not one of my favorites. It's got as good a momentum right now to the downside as the stock probably has. So you get this big long green or long red candle here, and then the stock has retraced almost all that red candle. It's just too choppy for me to want to trade it. Not seeing it. I would be favoring the short side versus the long side, but I actually wouldn't be trading it. MSFT, that has been one of the weaker mega cap tech stocks. I did look at that recently, and it's rolling over pretty well. It's below the AVWAP-E, has some relative weakness. You can see that on the daily chart. Again, very dependent on what happens after the close today. If the reaction is negative, Microsoft already has kind of a full head of steam on the downside here. It's been drifting lower. So when the market rallied last week, and this is the tell, see, rally, rally, rally. What did the stock do? Couldn't get through AVWAP-E. Sell, sell, sell. So that's a tell right there. That tells me that there's already weakness in it. Now that the market has been pulling back, you would expect Microsoft to move lower, and it is. So with the market strength here, I would not be favoring shorts on a longer term basis until, as I mentioned, you get that lower high double top and we start breaking down below some technical support levels. Then you can start shorting. Not until then. Picking market tops is a great way to lose a lot of money. So if you're tempted to short, do nothing. Walk away for a few weeks. You need to see that attempt to get back to the high be thwarted, and you need to see those long red candles. Only then can you even contemplate taking a swing short position. Day trading, seasoned trader, you do anything you want. You know what to look for. You know that right now the market's been strong. You know what to watch for in the underlying stock. You know how to tell when you're wrong. You know how to cut your losses early. You know that because you're fading the market, you're trading against the trend. You know you should be trading smaller size. All of those things you learn in time. So yes, Microsoft does currently have a little bit of relative weakness. Sorry for the pause here. I'm just trying to scroll through some of your questions here. I'll answer one or two more of them, and I think we might call it a day. MUSAPP. I'll take a look at those. TMUS. Whoops, I like to keep this on SPY, so I'm going to change this chart back so that we can always know what the market is doing. Go back into the 5-minute. So TMUS. And there you can see the stock has been able to hold its gains. It's got a nice little breakout here above this AVWAP-E. I like it. I think this stock could do well. It's a telecom company. It's had a nice, decent rally to it. So, yeah, it looks like a pretty decent long in here. You're not going to be making a lot. You're not going to be risking a lot because the stock doesn't move that much. APP, take a quick look at that one. So that's another one of those big gap up post earnings, really nice horizontal breakout, good volume, like all that. Nice big gap up, but you can see how the stock with this recent market selling is getting ready to test that. So we're 4 days past earnings. We're going to need to have some extra time to see what the stock does. Given this price action here, I think it's going to come into the gap. So I would be holding off on any long there. And when some of you ask a question and I get a bit emotional and animated about my response, it's because a lot of the mistakes I see repeated over and over and over again. And this is a very tough profession. It takes years to learn how to trade. And most people go into trading with unrealistic expectations, unrealistic in terms of how much money they can possibly make, unrealistic in terms of how much effort this is going to take. That's why I do my weekly videos. That's why I do these live events. That's why I'm writing an entire course. Those of you who are members or have taken a trial with OneOption, you've been able to read the system. If you are considering taking the trial, don't even worry about the software. Don't worry about the chat room and picking off great trades in the chat room. Read the system. I believe it'll cut years off of your learning curve. All the lessons, all the trials, all the tribulations that I've gone through, I write about, and you'll be able to avoid those same pitfalls. And when I started, I didn't have a system. I didn't have anybody to teach me a system. And there's a huge void as far as having a reliable methodology, a systematic decision-making process. That's my legacy. That's what I want to leave behind to the trading community. So I hope to release an article when I'm done with this live event. I still have to proofread it, but it's on the mental aspects of trading. So a couple more questions here, and then let's call it a day. CTLT. All right, let's take a look at that one. And the stock actually looks nice. It's put in the time. It's above AVWAP-E. Looks nice. I like it. This gap up is held. Really nice looking stock as far as I'm concerned. If you wanted to play it a little bit more conservatively in here, what you could do is you could sell an out of the money bullish put spread keying on the 55 strike price. So 55, 52.50. If you can get a 50-cent credit for that, I like it. Probably have to go out to March to get that kind of premium. Let's see what we've got. It's only got regular options expiration. So let's take a look at that, and we'll go, there's no premium in it. So very, very low option implied volatility there. So not viable, but you can always buy the stock if you have the right stock pattern. Don't skip the trade just because it doesn't have options. You still can make money on the stock. You can make great money on the stock. And oftentimes by excluding trades that don't have liquid options, you're going to be missing some of the best setups. So I would encourage all of you to really consider stock trading. And when you build your account large enough, you may never trade options again. You can get plenty of leverage trading the underlying stock, especially with 4-to-1 day trading margin release. And the liquidity in the underlying stock is far superior to what you're going to find in the options market. You can buy bids and you can sell asks, and you can rarely do that when you're trading options because you're always trading against a market maker. And when the market gets into a fast pace, and when you're trading the open, for instance, the option bid-ask spreads are way wide. The option implied volatilities are a little higher. That's when you should be exiting profitable positions. That's not when you should be initiating new option positions. All right, I think I have kind of exhausted all of the questions here. So I'll look at Meta, and then I'm going to conclude with my pick. And Meta had this big gap up post earnings. It's been able to hold all of those gains. It looks good to me. I mean, the stock looks like it's going to hold the support level. Could it move with news from NVIDIA? Yes, it could, along with the entire tech sector. So barring that, I do like what I see. So we're going to need to see what happens with the tech sector. If the stock comes out and it's relatively flat, the news has been absorbed, market is happy with where NVIDIA is currently trading, I think Meta could set up very nicely for an out-of-the-money bullish put spread. So wait for that news, something that's in the gap below this 450 level. So maybe a 450, 445 bullish put spread. Get $1 credit for that. Try and stay within 3 weeks or so. So we're going to go out to the March 8th expiration, and we're going to see if that lines up. So we're looking at the 450, 445 bullish put spread, 105 by 125. That certainly works. Might even be able to go a little further out, do the 45-40 and 77 by 92. So that's even pretty close. So I would consider either of those two spreads. Yeah, I like Meta. I think that's going to work out pretty well. And then also, while the market figures out what it's going to be doing in here, do we compress? Do we move higher right away on the NVIDIA news? That would be very bullish. Do we get a little bit longer, deeper dip in here? Do we get a pretty decent dip down to that 480 level that takes 3, maybe 4 weeks to resolve? If yes, then I would be holding off on swing longs until we find that support. And once we start establishing that support level, then we can feel pretty confident going out and selling some out of the money bullish put spreads. Pete, with a market dip that deep, how do you know that it's not just going to keep going down? Well, it could, but it's very unlikely. We have to play the probabilities, and the probability is that the market is going to find support there. How do I know that? I know that because of what's happened in here. This is a very strong move. Buyers are aggressive and they are interested. So a flat out fail here, unless China's economy collapses overnight and there are credit concerns or something god awful happens, some black swan type of event, which I don't see happening, the support level is going to hold. And selling out of the money bullish put spreads is going to give you distance from the current price action. It's going to give you cushion. And then we'll be able to see how well the market does. Does it bounce real high? Does it bounce very quickly? Is it going to zoom right back up to these highs? And those candles will tell us how aggressive we can be with our buying. But the first step would be to start getting some points on the board, start selling some out of the money bullish put spreads. So Garmin is your pick of the live event. It needs about 5 to 10 days to kind of settle in. And we want to see, for sure, we want to see, this is a big gap up. So we want to see the low from today absolutely hold. I'd like to see the majority of this long green candle hold. It looks to me like it's starting to retrace a little bit in here. And yeah, we can see that it's starting to pull back to VWAP. So keep an eye on Garmin. Longer term, I love that breakout. Really nice. You can see the longer the trend line, the more significant the breakout. And this is a significant horizontal resistance area. And this is actually a nice little trend line breach here as well. Thanks so much for watching, everyone. I hope you've learned a lot. We will see you next week, and watch for my video coming out this Sunday. Trade well.
Welcome to